Welcome back, I think, if you're here. I see we've got two. Something must have been going on inside of OBS, so I shut that down and I'm back to using the old standby here, StreamYard. So thanks for bearing with me. What I was talking about basically was and let me know if I'm chopping and buffering again now, because that would just be awful. Everything good on your end? So I was talking about a Cromford report saying that, sales are down, but they haven't taken this huge dip. New listings are still down. So thank you, everybody. We're not seeing listings explode like they did in May and June. So what I see on my 7-day moving average that I was sharing is that we are still trending down, and it's slight. And our new listings are starting to trend down. Now, after what we saw with the interest rate rise on Thursday, I expect both these numbers to go down even further, especially on the number of homes going under contract, which is rolling around 2,500, which is dismal. But there's nothing out there that says it's going to pick up because of what we saw happen with rates here. And rates went up to 6.70. Solomon, I'll get to your question here in just a moment. Thanks. The mortgage rate 6.70. Now, I have a question out there for you macroeconomic guys, of which I am not. But when Pat and I were on live the other day, we were watching Chairman Powell, and we always talk about how the numbers baked in the cake. Once he announced that we were going up 0.75, rates actually went down. You could actually see in the treasuries, boom, mortgage-backed securities, rates came down. Well, then lo and behold, the next day, they went up like crazy. And on Friday, that's when Pat came out with a new term to describe the mortgage rates. There's going to be a T-shirt out soon, so stay tuned. And we're scratching our head trying to figure out why. Well, then I saw a video yesterday from a gentleman. Let's see, what is his channel? Hearsay Financial. And I like this guy. He's really good, but man, he talks fast and you better be on top of the charts. But one of the things that he pointed out was that the Bank of Japan dumped a whole bunch of treasuries at 4:30 in the morning on Thursday. And so the market saw that, and because they're trying to shore up their yen, and in shoring up their yen because the dollar's going strong. And that's a little bit of a problem for us right now with the dollar continuing to strengthen and all the other countries, their currencies getting weak. They're going to start lowering their, not tightening. They're going to start lowering their rates again. And we can end up jumping back into quantitative easing, which we don't want to do. So the central bank's got a real problem. But I guess my point is, here we thought that the 0.75 was baked in. Japan makes this big move, our rates start skyrocketing. Now, if the Bank of England does that and Germany does that, they start dumping our treasuries like they did. We're in deep doo-doo. So I'm looking at the money supply, and this is what the Federal Reserve is trying to do, is pull back the money, right? And you can see they're doing it. But they're doing it. They're pulling it back, but they're fighting with the Treasury Department that's flooding our market with trillions and trillions of dollars. So that's going to have an impact as well. It's going to be something to watch as we get into the last quarter here. D. Rich says 6.7% is for decent credit too. Yes, you got to be top of the line. You're absolutely correct. Here's our active listings, and you can see they're going up, but they're going up again because there aren't sales. The new listings aren't adding to this pool of growth. We're only adding about 3,500 now every 7 days, and we're only selling 2,500. So there's like 1,000 that just aren't getting pulled off, and so that makes this number grow. And 18,000, you can see we're well above 2018 and 2019 levels, which you would think would really be putting pressure on prices, but there's just not a whole lot going on. We're very stagnant is the best way to describe it. Cromford Market Index, Supply Index the two have been married. They've been stuck together right there. And they're not crossing. As you saw back here in the big debacle in 2008, this gap between down here, which is demand and inventory, that was so huge that the market collapsed. Well, right now, there was a gap where supply was way down here and demand was way up here, hence the pressure on upward pricing. Well, now they're just kissing right here in the middle, and they're hanging in there. So it's going to be a interesting one to watch as well. Time for work. Review this later. Thanks, Marion. Sorry for the delay on that. Here is expired listings, expired weekly. You can see we're up to about 250 homes. That again, that's not a lot. 250 homes is considerably higher than where we've been, but we were knocking on that door back in 2022. And expireds are just people going, tried to list my home, didn't work. They're not really giving up. They're just, well, I tried to sell it. I guess that's just not gonna happen. Now let me get to the open door question here. Could you please break down when Open Door lists a house for 400,000? What are the hidden fees to look forward to? How much will it finally cost me as a buyer? Well, Open Door doesn't really have any hidden fees, unlike any other real estate transaction. You're still going to have closing costs. Closing costs run you about $4,500, maybe $5,000. You still have your down payment, depending on if you're getting into a home that's got an HOA. You've got some prepayments that you have to make. You're going to have loan fees, loan origination fees. But where Open Door can help you is not in hidden fees, but write an offer asking for some concessions. In other words, we'd like $5,000 in closing cost concessions. Now they can pay for your closing costs instead of you doing it. And they're jumping in at about 5.6% contributions right now at Open Door, which is huge. And so you can either get them to really lower the price or go with concessions, and they are going for concessions. So if you're looking at writing an offer with Open Door, the other thing, be sure and use an agent. And not because there's, trouble or anything, but Open Door has this process where you can call them directly, or you can online, you can make an offer, but it kind of takes the wind out of your sails when it comes to negotiating a price, because you're going to feel a little bottled in there, because there's a bit of a process to getting to pull their price down or getting them to contribute towards closing costs, just like there is in any other transaction. And the way it works for Open Door is when we submit an offer, there's a process for it. They have a disclosure form that has to be filled out. It has to go to a certain place, certain department. There's a lot more paperwork with an Open Door listing than there is with others. Not much, maybe about 3 more forms. But once they get the offer, they always call back the next day. So if you're shooting low, they will call back and tell you, if you were submitting the offer online, we're way off. How far up can you go? Well, what are you going to say? I offered you 350. I'll go 375. So you might have a little back and forth there. With an agent, they call me and they go, "Hey, Rick, we're far off. How far up can your client go?" My answer is always the same. I said, "Well, I'm not sure. I know I can get them up a little bit there. They don't want to go up too high. What number is comfortable for you?" And they will spit out a number. They'll say, "Well, we really don't want to go below 380. Okay. Well, let me see what I can do. Call the client and go, "Hey, let's go 365, see what happens." And then I just call them back. I go, "I've got them up to 365. Do you think that has any legs?" And they'll go, "Well, let me submit this to the selling department. I'll get back to you." And that's how it works. And next thing you know, you get, 365 didn't work, but tell you what, I got them at 370. I call the buyer. They're at 370. Perfect. We pulled them down $30,000. And then when it comes to repairs, because you're going to have the home inspected, they've already gone through and done some repairs in the home. They've made some, they've painted, put in new carpets. Sometimes they replace the countertops. And, but then there's a few things they miss. They always do. There's always something that has to be fixed in a home. They prefer to offer you concessions instead of sending a vendor out there for a couple of reasons. Scheduling them on time is tough. So, they don't go out and fix them themselves, and who does? So they have to find vendors to go out and make those repairs. So they always say, Rick, is your client open to seller credit versus fixing these items that you noted? And I always say, yes, they probably are. Let me check. And then I contact you and go, hey, they'd like to offer you some money to fix these. What dollar amount do you think we want to do? And thanks, Rolo. And it goes pretty smooth. And they agree to the repairs. Or not the repairs, they agree to the concession for you. You get the money, you can hire your own people. I like that better because, to be honest with you, some of the repair people they've sent out in the past, I haven't had them send any out this year, so I have no experience for this year, but they haven't been the best. I had one in Fountain Hills a few years ago. They kept telling me, yeah, they sent them out. And I went out there and I said, no, they didn't do anything. And it got down to where we had a discussion about over $250, and I couldn't. Their system wasn't as smooth as it is now, and the person on the phone had no skin in the game. So I said, we got to get resolve this $250. She didn't care. Finally, I just said, I'm going to send you an addendum, okay? $250 off. Please sign that, and that seemed to do the trick. Going forward, as we look into this week, this is the week I think where we saw the hugest rate jump. And if this continues like it is right now, I expect my 2,500 to drop to about 2,400 as we're getting into a time of year when listings should start growing, at least in October. That's not a bad month to start listing. So it's going to remain slow. Now, I have a new listing coming up this coming Thursday, and one like, that's it. I appreciate it very much. Hey, I've got one of the subscribers asked me if I do a deep dive on the over 55 community, and I recorded that yesterday, and I enjoyed it. I did a walkthrough around the valley and showed examples of the over 55 pros and cons, and I'm thinking that's probably going to launch tonight. So be on the lookout for that. I hope you find it interesting. I don't have any follow-ups on the water. That's probably going to be a while before I do that. But in the meantime, everybody take on the Monday. Have a fabulous day. Take care. I pushed the wrong button. Wait, got to get my exit in here. I'm used to OBS. Ha!